Hi, I'm Liz with Liz Toth Properties, powered by EXP Realty. I'm a residential real estate agent in Raleigh, North Carolina. And today I am so excited. I have a very special guest with me today. I have Ron Heath, who is a lifestyle home loan specialist with Mutual of Omaha. So Ron, thank you so much for being here with me today. I appreciate your time. Do you want to spend a couple minutes just introducing yourself to everybody so they can get to know you?
Sure. Sure. Thanks, Liz. I really enjoy you having me today, and I appreciate the opportunity to talk about what I do. I'm Ron Heath. I'm with Mutual of Omaha Mortgage, and I am a lifestyle home loan specialist. We refer to it also as a HECM for purchase. But anyway, I've been doing these loans for over 16 years now. It's the only mortgage I've ever done. So I specialize in this. I enjoy doing it and had a nice opportunity to work with many home buyers in our area. I was born and raised in North Carolina. I've lived in Raleigh since 1969. So it's fun to be able to help people come and live in the area where I've spent so many years and just really love this area that we live in. So I appreciate you having me here, and I hope we can help some people understand better how this thing works.
Yeah, definitely. I've had the opportunity to work with Ron on several occasions. And as you mentioned, he specializes in the HECM for purchase. I've learned a little bit about it. The program has been a game changer for some of my clients in the active adult world. And so I wanted to bring some extra attention to this particular program, especially since I specialize in active adults, and it's specifically geared towards the active adult buyer. So Ron, tell us more about the HECM for purchase mortgage. What is it exactly?
I sure will. So this is a program that was created in 2008 by FHA. It's a loan program that is specifically for people 62 and older. It's insured by the federal government and provided through lenders like Mutual of Omaha. The way the loan program is structured is that it allows somebody 62 or older to purchase a home, and they make a one-time cash down payment, which can be anywhere from 60 to 70% currently. But then the balance of the purchase price is something we finance with the HECM for purchase loan. The unique thing about this mortgage is while it is just a mortgage, meaning the borrower owns the home, they're never responsible for making any monthly mortgage payments on this loan. It's something that just as a loan balance that sits off to the side as a homeowner, once they've purchased with, let's say, their 60% down payment, their only obligations are to pay their property taxes, maintain homeowners insurance, continue to pay the HOA dues. And then as long as one of the borrowers is living in the home, this loan will never become an obligation of theirs during their lifetime.
That's amazing. And, I talk to a lot of clients about this. Especially people who are coming in from out of the area. And I a lot of times get immediate pushback from buyers because they view it as a reverse mortgage and there's a negative stigma with that. Tell us how the HECM for purchase mortgage is different from a reverse mortgage.
Yeah, I sure will. And so I get the same pushback too, Liz, oftentimes. And I have to highlight that, again, this program is only about 15 years old. It started in 2009. So it's really, really new. Now, FHA's had a reverse mortgage available for the last 35 years, 36 years. But this loan's different than the one they developed way back when. It's not the reverse mortgage you see on TV with some of the major actors. It's a program that's very unique because you're allowed, the old reverse mortgage, you had to own your home to be able to use. This one is built so that you purchase with it. You don't already have to own a home. Now, some of the stigma that goes with reverse mortgage, sadly, is based on misconceptions. Some reverse mortgages back in the 60s and 70s and 80s, they were a little dangerous at times for the homeowner, and they caused misconceptions like the lender owns the home or you could lose your house because of using this. But I will say honestly, since 1988, when FHA created the original reverse mortgage, and then in 2008, when they created the HECM for purchase, they have been monitoring this loan, regulating it, making protective changes so that the homeowners cannot be harmed by this loan in any way. So if somebody goes, well, I've heard reverse mortgages are different, the first thing they need to do is talk to a specialist so that they can understand, is what they believe true, or is it based on misconceptions? And then try to understand how the HECM for purchase is a hybrid, wherein it has some of the protective measures of the traditional reverse mortgage on the back end. It's completely different on the front end.
Okay. And you touched on something that I get asked often. Does the buyer, so if they're using the program to purchase the home, Does the buyer own the home or does the lender own the home in that
Yeah,
situation?
excellent question, Liz. Yeah, and that's a big concern, right? Because it has a funny feeling. I'm going to lend you money, but tell you to never pay it back. It just goes against conventional thinking, right? We're 30-year mortgage. I've got to make a payment somehow. And so it does create this kind of unknown concern. What I would say is it is a mortgage. And like any mortgage a homeowner's ever had, we as a lender simply establish a lien against the property. We have to do that to protect our interest because we've loaned money towards the purchase, but it does not mean that we own the property. I'll illustrate that this way. I've had buyers who use the HECM for purchase just recently, where they purchased in 2018 with the HECM for purchase and then decided to relocate to the beach. Well, 3 years later, we were able to sell the current home that had a HECM on it because you're only allowed to have one at a time. So that was sold. They used the HECM to buy the very next home. And interestingly enough, since then, she's decided that she wants to purchase another larger home, and she'll do so again with the HECM.
Wow.
So I use that to illustrate it's your house. If you buy with a HECM and in 5 years you want to sell, just sell. What
Yeah.
you'll pay us back is what we loaned you and the interest that may have accrued on that loan for the time period that you've lived there. Anything left over from net sale proceeds are yours to use for the next transition.
That's amazing. That's great. And under this program, I understand there's like different obligations than if you go the route of a conventional mortgage. Is that true?
Are you talking about from a qualifying standpoint or after you have the mortgage?
No, from a qualifying standpoint.
Qualifying. Yeah, a traditional mortgage, they're very concerned about the borrower's ability to repay because they're taking on a monthly mortgage payment. And as we've already discussed, this loan has no monthly mortgage payment. So we don't have to qualify based on that parameter. What we do look at is your credit history, not your credit score. We don't really care what the score is. We just like to know that our borrowers are people who show evidence of wanting to pay their bills on time. And then we look at property charge payment history for 2 years. So if you've owned a home, we'd like to see you paid your taxes on time, maintain homeowners insurance. So those things are less strict than what you would see with a traditional mortgage. And then on the income side, since you're not making a payment, we don't have to worry about your income caring for that. But we do want to make sure that you have income adequate to pay the taxes, pay the insurance cost, pay the HOA dues. We calculate what utilities may be, and then we want to measure a residual income, but not really a debt to income ratio. The interesting thing, Liz, too, is I do have, and you work with them, we have buyers who maybe are in their early 60s who aren't taking any income yet. They're postponing that. They have assets that they're living off of. In that case, we can even look at their assets to create a hypothetical income so that we can, again, qualify them based on income. So it's an easier loan to qualify for when compared to a 30-year mortgage.
Okay, that's amazing. And is there any kind of training involved as well? Isn't there a program that the buyers go through as well? Will you touch on that and what does that involve?
Yeah, it is. And so FHA, they've always wanted to make sure that buyers in this demographic are not being misled or taken advantage of, because financial abuse is so common with people once they get into their 60s, 70s, and 80s. So they want to make sure that as a loan officer, I've properly explained everything to them. They understand their obligations and how the loan works, both for them and their heirs. So they're required by FHA to go through a counseling session. Most of my clients choose to do that over the phone, but it lasts about an hour. And the truth is, when a buyer's working with a loan officer who has properly educated them, the phone call is just a matter of redundancy. I oftentimes hear, well, I didn't learn anything you didn't already teach me, Ron, but it's a requirement by FHA. And so that's a step that has to be taken before we can begin the process of the loan.
Okay. And it probably helps because I know that the folks that I have worked with that have used the HECM loan and learn about it always say, like, this is too good to be true. Yeah, and I'm sure you've heard that as well in working with different clients over the years in our area too. And you mentioned something about heirs. So I do get this question a lot, is like, what happens, if I pass away and I leave the house to my heirs, can they sell it? Or, there's the impression that the heirs won't own it and things like that. What is involved in that process?
Yeah, that is probably the biggest part of the conversation when I meet with people, because once a buyer or a couple, they understand how it benefits them, right? The ability to keep, $100, $200, $300,000 in reserve for retirement spending, they're eager to move forward. But their concern is, what does this look like for my son, my daughter, my grandchildren, whatever it might be? And so, again, as we've already stated, it is just a mortgage. So they own the home, which means at their passing, it does go to the heirs that they've designated in their will. Now, when the heirs inherit the property, they have different options that they can look at. The most common option is that when mom and dad have passed, typically the loan balance with the interest that has accrued has not exceeded the value of the home, because it's also appreciated while they've lived there. So typically the heirs, having no interest to live in the home, they just sell the home, they market it. Once they get a buyer and they close, the loan itself and all the interest is then paid off. Anything left over from the sale proceeds are the heirs to keep. Now, some might say, well, wait a minute, how can you guarantee that that's going to happen? And as you know, we can't, right? We hope the house is going to appreciate, and we expect the loan balance to be a certain level, but mom might decide to live to 110. We can't prevent that, which means now this loan has grown bigger for a much longer time than expected. And what happens if the home they've inherited is not even worth what the balance is on the loan? Now, the heirs actually have two options at that point in time. If they choose to, they can take all of the effects out of the home. They can leave the keys on the counter and tell the lender the house is theirs, and they can walk away without any further financial obligation whatsoever. That has happened on occasion, depending on the market where the home was and, different factors like that. Or if they choose to, the heirs will say, well, what if I want to keep the home? FHA does allow for the heirs to be able to purchase the home for 95% of whatever that future value is, and then they can keep the property. It's a slight discount. So if they inherit a home worth $600,000 at that time, they could purchase it for $570,000, even if the debt on the home is $700,000, $800,000, $900,000. They're not obligated for that balance that's due. Again, that's where the FHA insurance comes in, because it does guarantee that any debt not cared for through either the sale of the home or the purchase by the heirs at 95% value, that debt is insured by FHA and not the responsibility of the heirs.
Okay, that's amazing.
Mhm.
That's really amazing. Well, you mentioned, if some clients that aren't like getting Social Security and they're delaying that, let's say they start getting their Social Security and drawing from their retirement accounts, can they make payments towards that loan balance?
Yeah, they can. There's no prepayment penalty whatsoever. And so some buyers will begin to make, as you said, when they have cash flow that's adequate and they have surplus, they'll make voluntary payments towards the loan, thereby paying down the interest accrual and reducing the loan balance. There's no penalty to do so. The advantage, obviously, is when the heirs inherit it, they're going to create more equity in the property for the heirs at the point of sale. There's also a side benefit not discussed much. Won't go into details here because it's a pretty deep dive, but when voluntary payments are made, we recognize that they've created equity in the home. And so we're going to give that value back to them on a line of credit within the loan, so that if they need to come back and reborrow any prepayment they may have made, they have access to it. So it's not just locked back up in the home. They have the ability for future income if they need it. But that's kind of a deeper discussion. Sometimes we get into it, but it's interesting. I have every buyer say to me, okay, Ron, can I make payments on this loan? And I always say, you sure can. And then a year later, when I talk to them, how are those payments going? Oh, we decided to spend the money on the grandkids or go traveling. So that's usually what happens.
And that's so nice to have that money available, and folks can go out and pursue their dreams and pursue hobbies or travel, like you mentioned. Spend the money on the grandkids, things like that. And that's one of the nice things about this loan, is that you do have that ability and don't have to worry about that. You touched on this a little bit, but I just want to touch on it again, or just go through, when does the loan actually get paid back? So you mentioned how it gets paid back. For example, if the heirs were to get the home. But walk us through that process as just the typical situation.
Yeah, so typically when the loan gets paid back is when the death of the last borrower occurs.
Okay.
But there are other things that could cause it to be paid back sooner. So again, I mentioned earlier, my client that has now bought 3 homes in a row.
Mm.
If you sell the property, then it's expected that the loan would be paid back. If you were to transfer the property out of your name into somebody else's name, well, now technically the home is no longer yours, so the loan would have to be repaid. The only other time, which thankfully we see happen very infrequently, is if a buyer stops paying their taxes and insurance, now they are considered to be in default. And so the loan could be required to be repaid at that point in time. We don't see that a lot because of the qualifying that we do to make sure they have adequate income. But that's normally the settings that we see. So death, sell, or move. And so they do allow for you to have this mortgage and to have this home, even if you have to leave the home for a period of time because of healthcare needs. As we get older, sometimes we may have a fall that creates a broken hip or a broken shoulder, and we have to go into rehabilitation for 3 months, 6 months, 8 months. Those things don't cause the loan to be called due and payable. You don't have to pay it back. As long as within 12 months you move back into the property, then the loan stays in force and nothing changes. Now, if somebody were to have a major medical occurrence and they leave the home and it's evident they're going to be gone permanently and they're gone more than 12 months, then it's expected that they're now considered no longer living in the home as their primary residence. So the lender would require repayment at that time, which typically when somebody leaves a home for a major medical occurrence like that, the heirs already know mom's not coming home. So let's go ahead and put the home on the market. We can get the loan paid back and then use what's left over to help for mom's care. So,
Yeah. Okay. Excellent.
Mm.
Well, like I mentioned earlier, I mean, I know enough to be dangerous after working with you on several clients over the years. What did I miss that we didn't talk about that you think is important for someone to know about the HECM for Purchase mortgage?
Liz, I think you hit everything. You hit all the really good high points, all of the things people need to understand. One thing we can't do on this call or this video is to say, well, this is how much you need to have in cash to buy the home, because that's going to vary from buyer to buyer, because what we can lend you for the purchase of the home is going to depend on your age. The younger you are, the less we can lend because you're going to live there longer. The older you are, the more we can lend. And so one thing we can't cover is what does this look like for each individual buyer? And so I think that's when you say, you know what, speak to the expert, speak to Ron, let him run some numbers for you so that you can see what that's going to look like. But otherwise, I think you've really covered everything. What I would like to say on a personal note is I've helped hundreds of people buy with this loan. And never have I had one person say, I made a mistake, or I regret this. I wish I hadn't have done it. I think Sue, I use her first name only, not her last name, but every time she emails me and says, I think I want to sell and buy the next house, she always calls herself Crazy Sue. And I'm like, Sue, you're not crazy. You just want what you want. But I think what that illustrates is when people use this, they love it. And that's why Mutual of Omaha is moving from the title of HECM for Purchase, which is what FHA calls it. We're not going to move away from that, but we want to call it the lifestyle home loan. And the reason is it changes the lifestyle for people that are able to use it. And it doesn't matter if you're somebody who says, wow, this loan will let me buy a little bigger house than I thought I could without a mortgage payment, or if you're the person that says, I got plenty of money to pay cash for it, but I think I'd rather withhold cash and reinvest it for other things. So it doesn't matter who you are, what your financial situation is. It does change the landscape of your lifestyle and retirement. So I don't know. I have always had great experiences with the people that have used this loan. I know you have with those that have worked with the two of us. They've just really enjoyed the results for themselves. So no, I think you got it all.
Awesome. And to echo Ron, the folks that I've worked with over the years that have used the HECM for Purchase, and I have had a couple who have used it multiple times, like coming from different locations and things like that. changes their lives. You know, the people that it's always like, you know, this is too good to be true. And then when they get into it, it's like it really changes their lives and gives them the ability to do things that they might not have been able to do. So, Ron, I really appreciate you taking the time to speak with me about this mortgage program. In the description below the video is going to be all of Ron's contact information if you want to reach out to him. I always refer folks to Ron. He does a great job. I always get very positive feedback from all the clients who talk to him and work with him. So yeah, if you want to contact him, his information will be in the description, phone number, email, and website. And if you're thinking about relocating to the Raleigh area or you're interested in active adult communities in the area, don't hesitate to reach out to me. You can also check out more information on my YouTube channel, Welcome to Raleigh. It has community tours, city tours, information on the real estate market, buyer tips and seller tips, and more interviews like this. We're doing more interviews this year. So thank you so much for taking the time to be with me today, Ron, and thank you for taking the time, everybody else, for watching this video. I hope you have a great day, and I'll talk to you soon. Oh boy. Okay.